We're going to look at, this is XYZ Corporation, and we have May 5th and May 12th. Okay, so these are a week apart, so you're not going to be comparing these 2 days to each other. We're going to be looking at them individually. So what's the difference between the high and the low on May 5th? Well, our high is 52.60. Yeah, 52.60. And our low is $49. And so we're just going to take our high and we're going to subtract our low from it. Now we're going to actually use a real pen. So that was our high, this is our low, and if we subtract those, we get 360. And what does this tell us? Basically, this tells us how much the stock fluctuated. So that's why you'd want to look at that. So the difference between the high and the low tells you there was a $3.60 fluctuation throughout the day. So it was kind of bouncing around. On May 12th, so we're here, what is the actual volume of the XYZ shares posted? Okay, here it tells me sales in hundreds. Now remember, that tells me how many groups of 100 there were. So I have 32,000 sales of 100. So that means there were 32,000 groups of 100. So I'm going to take 32,000 and I'm going to multiply it by 100. I'm going to add 2 zeros to the end of it. And that's 3,200,000. But it says here now, write the volume in thousands. Okay. So what I had was I had 32,000 hundreds, which equals 3,200,000. But if I want to write it in just thousands, I take these 3 zeros off, because that's the thousands place right there. So 3,200 thousands. And why would we need to know that? Is because sometimes they do report in sales in thousands. So if this was sales in thousands, those were 3,200. Make sense so far? At what price did XYZ Corporation close on May 4th? For that, we look at what's called the change. Right here, we look at the change and the last. We're not going to look at the open, because the open could be different than the previous day's close if there was that after hours trading. So I might close at $40 or $50 or whatever, but I'll be opening at a different value. My microphone died. Hopefully that was recording. If not, I'll go in and I'll edit in vocals later. Okay, so to figure out what type of price it closed at, we had a change of 261, and this is a positive number, so we've gone up 261 since yesterday. Okay, so if this is a positive number, I want to subtract it from my last, because I went up. And I'm trying to find yesterday, so I need to go back down. If it was a negative number, that means I went down from yesterday, and so I'd want to go back up. Does that make sense? So if the change is positive, you subtract to find yesterday. If the change is negative, then you add to find yesterday. You always want to do the opposite. And so I have 52.20 minus 261. $49.59. And then we can look at the open, which was 50.10, and we can see that it doesn't match. So that does mean that there was after hours trading on this particular company that day. So far okay? Now, May 4th closing price and the May 5th opening price to find the difference in prices as a percent increase. So what I want to do real quick is I'm going to add an extra page and I'm going to kind of go over how you do percent change. Oh, using the wrong mouse. Okay, percent change. And this can be an increase or a decrease. If it's an increase, you get a positive answer, and if it's a decrease, you get a negative answer. Okay. And the easiest way to remember that I can tell you to do a percent change, and you don't have to worry about figuring out an increase or decrease, because it'll always tell you by if you get a positive or a negative, is you take the new value, subtract the old, and divide it by the old. So new minus old divided by old. And if you put that in letters, you can say no, which is how you guys feel about math. Hope you remember it. But anytime you want a percent change, you're trying to figure out the percent change, it's always the same pattern will always work. If you take the new value, subtract the old one, and then divide it by the old one. So when we're talking about the percent change on stock between an open and a close, the close from the day before would be the old one, and the opening from today would be the new, right? Questions on that at all? I keep going to that stupid mouse. We've got May 5th open was 50.10, and we figured out the May 5th close was 49.59. So this is going to be our old, and this is going to be our new. Okay. So we're going to do new minus old divided by old. Okay, so 50.10, 50.10 minus 49.59 is going to give me what? Wait, hold on. Use May 4th closing price and May 5th opening price. Yeah, no, it's the, that would be a new one, but we're using May 4th closing and May 5th opening.
Oh.
Okay, so the May 5th opening is the new, and the May 4th. And so the difference between those is 51 cents. And we're going to divide that by 49.59. And that's going to give me 0.0102, or we're going to, sorry, 0.28. We're going to round to the nearest hundredth of a percent. So I need to move this 2 places over for my percent. And this is tenths, hundredths, so I'm rounding to the 2. So it's going to give me 1.03%. So that's how much that stock increased overnight, 1.03%. This happens too. Sometimes things will happen in the news or with company announcements that will cause the stock to rapidly increase or decrease. And they announced a decrease in earnings, so they announced that their business was doing poorly. And what happens when a business is doing poorly is a bunch of people go, I don't want a bad business poorly stock, I want good business stock, and so they go sell their stock. And when a lot of people start selling stock, it causes the prices to drop. Because stock prices have very little to do with anything that is going on. Like the company itself does not make the stock prices go up or down. Things that the company does can affect the people that own the stock, but stock prices go up or down based on their desirability. If a bunch of people are selling the stock, that's indicating that a bunch of people don't want it. And if you don't want it, it's bad and the price goes down. If a bunch of people are trying to buy the stock, it indicates that a bunch of people want it and that makes it good, and so the price goes up. It's sort of like if you look at precious metals and gemstones, right? Now, granted, some metals have value because they are good conductors and we use electronic components and stuff like that, but back before electricity, gold was still considered to be very, very valuable, right? And it really didn't have any value at all, except that people thought it was pretty. And it was kind of rare. And everybody wanted it because it was pretty. But they weren't using it as a conductor or, you know, in computer parts or anything like that. It was just like, I have this pretty shiny and I'm going to put it on my wrist and look at me, I'm pretty. And so it became very valuable. But it didn't have any intrinsic value in and of itself. It's a piece of metal, a rock in the ground. It's no more valuable than any other rock in the ground, except that people thought it was prettier. Stock's the same way. Ownership of a company, the value of your stock initially starts as part of the value of the company. So when the company starts and it goes public, that's how much the initial value of the stock is set at, is that fraction of the company value. But then what happens is that people decide if the stock is worth anything or not by the trades, the buying and the selling. And so it starts out as the company has value and that causes the stock to have value. What it turns into, though, is the stock having value gives the company value. And the value in the stock is only based on whether or not people want to buy it. So if you announce a decrease in earnings, people decide they don't want your stock anymore. And they start selling, and that causes the price to go down because it's no longer desirable. Does that make sense? So it closes at 44.37 on May 6th. If we looked back at our chart on May 5th, it closed at 52.20. And that was the last, which is the close. So we wanted to express the net change from May 5th to May 6th as a percent. So the new is 44.37 minus the old, which is 52.20 divided by the old. So 44 minus 52.20. And remember how I said if you use this formula, new minus old divided by old, if it's a decrease, you get a negative number. So it was a 15% decrease in their stock, which is actually really big. In your day, it's PEMDAS. In my day, it was please excuse my dear Aunt Sally. And then I had some students make up one, and my favorite one was purple elephants munch daisies all Saturday. My favorite. But what this stands for is the order that you do the math in. So first, anything in parentheses or other grouping symbol. Okay. Other grouping symbols include, I didn't draw that very well, these things, and those things, and these things, and stuff above or below a fraction bar. So like you would do everything on top and then everything on the bottom first before you do that division. Then the next thing you do is the exponents. Then you multiply or divide in order as you move from left to right. That gets people confused sometimes because they think because the m comes first, you have to go through and do all the multiplication and then you go through and do all the division. But that actually can give you the wrong answer. As you read the problem the same way you read a book, so you move from left to right. And so if division comes first, as you go from left to right, you divide first. Multiplying and dividing have equal weight, equal importance. And then the same thing with adding or subtracting. Okay, and here's how you remember. Parentheses and grouping symbols, those are the king. They have the most power. Exponents are the queen. They have the second most power. Multiplying and dividing uses the prince and the princess. They have equal power, but below the king and queen. And then adding and subtracting is peasants. Okay, that's the hierarchy of math. Adding and subtracting are peasants. No power, they're last. Okay. Give rounding. Is it? I never remember the poem. Something about 5 or more up the score. Do you guys remember that? Okay. Yeah, I never remember. Okay, basically, I'm looking at a place value, right? And if I want to round to this digit here, I have to look at this digit here. That's the important one to look at. If this is 0 through 4, you're going to keep the triangle number the same. And if this is 5 through 9, you round the triangle number up. And then everything after that turns into zeros. Remember all that? Any questions on that? All right, so stock market data is a bunch of numbers, right? It's a bunch of prices and or volume, price and volume. So there's lots of ways to represent this. There's lists of just daily prices of opens, close, and highs and lows, kind of like that chart we saw for XYZ Corporation. There's line graphs, there's stock bar charts, there's something called a candlewood chart. We're going to go over a lot of those. And they all serve a sort of a different purpose. With a line graph, typically you're just talking about one thing, like the close. And so if you go through multiple days, it's just going to track the close because it's not going to be able to track all those individual changes, and it can't do the high and the low in there and everything. So if you're just looking at like the trend over time, a line graph is really good because you're just going to look at all the close prices. If you want to know how the stock was doing throughout individual days as well, a graph like this is going to be better because what this is called the stock bar. And it has the main chunk, the main line down the center, and the top of it is the high and the bottom of it is the low. Makes sense, right? And then the little line that pumps off to the left is the open, and the line that goes out to the back is the close. And that also makes sense too if you think about reading things from left to right. We start the day, we end the day, and then we go into the next day. So here's our first day. We go in, we go out, we go in, we go out, we go in, we go out. Does that make sense? So open will always be on the left, and then close will be on the right. Okay. And what'll happen, and this picture's not so great, but this will have a scale. like here off to the side, and this will be prices up there. And so where the bottom line lines up, the bottom of the line lines up, that was your low for the day, plus you, where the top of the line lines up, that's your high for the day, and then these line up to your open and your close. Down here at the bottom, you always have volume, and so these will be, up here is prices, this is just numbers, and they could be in the millions or the hundreds or the thousands, it just depends on what scale they set it, and it'll say in millions and hundreds and thousands. And this tells you how many shares were sold or traded that day. So if I look, this is one day, right here. This is one day. So I can, from this price, or from this chart, I can see here was the high, here was the low, and this is how many you traded. Then the next day. And so this gives people, like analysts, more information to look at, but pictorially. And you don't necessarily maybe need to look at this and see exactly what these values are, but you can see a big picture of what's happening with the stock. And if I'm looking at this picture, I say, okay, the stock is kind of fluctuating up and down, but the trading volume is getting really low. People are becoming less interested in this stock, it looks like. And at that same time that the trading volume is going down, the price is trending down also. You see that? So, you know, and then people that make a living out of this look at like year worth of this at a time and see patterns emerge. And so that's the point of the stock chart. Rather than trying to look at a long list of numbers and try to figure out a pattern looking at numbers in a list, which is very difficult to do, you look at a picture of the numbers and you can see a pattern much more easily. We actually talked about that in my last class, in my liberal arts class, because we were doing number patterns versus visual patterns, and they were saying the visual patterns are easier to see what's happening. But that's because naturally we see patterns in pictures. It's like we've evolved that way. So when we take the stock market data and we put it in a picture, we see what's happening. This is an actual Bank of America stock bar chart. I don't remember what, I think this was like 2011, going from June to September. And you can see what was happening. Some bad stuff was going on. Oh, the red and the green, it's just the way you come in on the open and you go out on the close. But you see here how the open is higher than the close? It's kind of hard to tell. But the open is, so when you look at this, so I look at the stock bar and I have an open and I have a close. If the open is higher than the close, and this one is red. If the open is lower than the close, it's going to be green. And so sometimes they'll differentiate with color like that too, so that I can look at this quickly and say, oh, it's these days it closed lower than it opened, that's bad. It lost money those days. And then the green days, it closed higher than it opened, so it gained money those days. But you're looking at this, and something was happening here that was causing Bank of America stock to plummet. And then they rebounded, and they went into a more normal pattern. But you can look at that picture. That's 3 months worth of data. I'm not having to look at any numbers. You can see what happened to their stock. And looking at that, you can see this trend. If you made a line through it, do you see what I mean? So you see the patterns emerging. And that's the purpose of being able to read these charts. And that's much easier than looking at, like I said, a list of numbers and trying to figure it out by just comparing a list of numbers. It's hard to see. Okay, so we're going to read that chart. So I'm just going back and forth between that chart. Saying which day had the greatest high price. All right, so high price is the top of our Greatest high price, right here. Do we all agree? Okay, and that is September 8th. And then the next part is what is that price? So this is $34, this is $35, so I'm going to say that it's 36. We're not going to be 100% exact on these. It's a guesstimation because, you know, we're looking at a picture. So it's September 8th and $36. Okay, which they had the least low price. Okay, so if I go for the low is the bottom of the stick, and that's right here. The least low price. And that looks like it was probably $18, or close to $18. And the day was, that's July 14th, so July 15th. Okay, not too bad so far? Okay, which they had the highest closing price. Now, if we remember on the stick, the closing price is the one that sticks out like that, so to the right. So if we go back, we're going to be looking at these sticks on the right. Now, the highest closing price is not going to be down here, right? It's going to be still up top. So we can eliminate, you know, most of this chart. And we're going to look at the higher days. And this one here on the same day as our highest high appears to also be our highest close. Would you guys agree? So, and that is like 3/4 of the way between 34 and 35. So I'm going to call it 34.75. But if you said, well, no, that's more like 34.80, you could write that down too. We're close, right? It's not an exact number. What you couldn't write down is 32.50. So that's not close. So we're going to go with September 8th and 34.75. Oops, wrong one. Okay, which they had the lowest closing price. So again, we're looking to the right. Well, same. We're way down here. How far would you say that is off of 18?
1975. It's like right there.
Well, it's almost to 19. It's going to be between.
It looks like the same.
I don't know. I'm going to go with the we'll go with 18 and a half. Split the difference, right? Works for me. July 15th. 18 and a half. Now, again, though, like on an assignment or on a test, if you said 1825, or you said 1835, or 1860, or 1875, as long as you're between that 18 and 19, like, you know, because you're looking at a picture and you're guessing, you don't know the exact price. Okay, how many shares were sold from September 8th until the end of the chart? Now, that's where we go down here to the volume. And it's hard to see, but this right here says millions. Okay, so these numbers, 0, 50, 100, 150, 200, and 250 are millions. Okay, so September 8th, that looks to be about 160 million, I'm going to say. And September 9th, just a little bit over 100 million, so I'm just going to say 110. I'm guessing. And then September 10th is 100 million. And then September 11th is another 100 million. And then September 12th went down, so I'm just going to say like 90 million. Then we went way up to like 300 million. My hands in there. Then we're back over above 150 2 days in a row, so I'm going to say 175 and 175. And those are millions of shares. So I'm going to add that together. And $1,210 million. Well, what is that as a number? That's 900s, thousands, 100,000, millions. That's 1,210,000,000 shares of stock sold in that period of time.
What'd you put, like, can you go back to the
The back page?
Yeah.
Yeah.
I just finished copying that.
10 million, those were all the buys and sells, so it was the same number of buys as it was sells. So trades. So a lot of stock in that period, short period of time, traded hands. We're going to construct a one-day stock bar chart using this information. Now, our open is 40.10, our close is 39.75, and then we have 40.65 and 39.39. So we're between 39 and 41. So we can make our scale kind of big. So we can, we're only like a $2 range. And then we have a volume of 44,500,000. Okay, so our volume goes down here. And our dollars go up here. And if I say this is 39, and then I can say this is 40, and I can say this is 41. Okay, and that would make this about 39.50, and that about 40.50. 25.75, 25.75, just kind of give us a range. Doesn't have to be perfect. And then for our volume, we've got 44,500,000, so I could say, so this is dollars, and this is millions. So I could say 44 million and 45 million. And then the halfway point is going to be halfway between those. So far, okay? Alright, so our high and low determines the height of our stick. Our high is 40.65. I'm saying that this line here is 40.75, so I want to just be a little bit below that line when I start. So I'm going to start somewhere there-ish. And then our low was 39.39, which is close to 39.40, which is a little bit below 39.50, which is right here. So I'm going to go a little bit below there. Doesn't have to be exact, but you want to be in approximately the right area when you draw a line. Okay, so far okay? Open is on the left, close is on the right. Our open is at 40.10. Here's 40 and 40.25, so in between there. 40.10-ish. And then our close was at 39.79. So here's 39.75, so just a little bit above there. Not too bad. And then our volume was 44,500,000, which is going to be halfway between here and here. And so right under the same bar, you just make like a bar graph bar, like a fat one. You guys are supposed to catch my bad math. It should have been 45 and a half. I went all the way, or 44 and a half. I went all the way to 45. I made that way too tall. Yeah, that was the volume. So it should have only been about that high, not all the way up to the top like I had it. Sorry about that. Alright, so we have the stock bar chart, and then we have another kind of chart that's called a candlestick chart. It's called a candlestick chart because it looks like a candlestick. They're very creative. That looks like that. Okay. They'll indicate them with two different colors, kind of like that Bank of America had yellow and red and green. The candlestick charts will have two colors, and the two colors can be any two colors they select. Most commonly you see black and white, or red and green, but it can be any colors. Like if you felt like making a candlestick chart purple and pink, you could. You just have to say which one indicates which situation. What we have here, the box is called the real body, the line on top is called the upper shadow, and the line on the bottom is called the lower shadow, and who cares? The top of the box is either the open or the closed. And the bottom of the box is the other one. And it depends on the colors you're choosing. In this one, white is good, so close is higher. And in this one, the black is not good, so the close is lower. So this might be, the black one would be equivalent to like a red, and then the green for the white, or whatever colors they chose. And there will be a key off to the side. If they're using anything other than black and white, there will be a color key. So if you close higher than you open, that means you earned money that day. That's good. You always want the close to be higher. You want the money to be going up, not down. Okay. Then the upper line, the top of that is your day's high. And the bottom line, the bottom of that is your day's low. Now, if your high and your close were the same, there won't be like a top line. It'll just be the top of the box. So if they match, it's just the box. Does that make sense? Any questions about that so far? So we go to this one. We have Microsoft. All the whites occur when the close is higher. And all the blacks occur when the close is lower than the open. And then the lines on the top and the bottom are indicating the high and the low that day. Now if you look here, there's not really much of a line. So this open is the same as the low. And on this next one, there's not a line on top, so the high is the same as the close. Does that make sense? And this one's kind of similar to the stock bar chart. You can see the emerging patterns. Personally, I like the bar charts better. I think they're easier to read, but these do happen, and it just depends on whatever agency is reporting the prices as to what kind of chart they use. Tells you the same information, the pictures are just different. So, the 10th and the 11th. So if we go back to here and we go to the 10th and the 11th, we want to know what's the difference between the market action. On the 10th, the stock went down. It closed lower than the open. And then on the 11th, the stock went up. So, make sense? So the close here was less than the open, so the stock went down. And here the close was greater, so the stock went up. What is the approximate difference between the highest price and the lowest price for the month? So we're going to look for the very top line and the very bottom line, because the highs are the sticks and the lows are the other sticks. So if I come over here, I'm looking for the very tallest stick. And it's the third day in. And it's just a little bit under $270. See that? So I'm just going to call it like what? You think 269? Okay. Yeah, that good, 269? Okay. And then lowest low, if we come all the way to the end of the month, you see the lowest low, and that line goes just below the $90 mark. Okay, now this one, I messed up the scale. On this side is the millions of the shares, and on that side was the price of the stock. Okay. We're just going to call it that for now, because I don't remember. So we're down here, and this is the $90 line, so it's just below $90, so we'll say like $89 bucks. So So 269 and 89. Well, 269 minus 69 is 200, and then we'll subtract another 20 from that, and we'll get 180. Good. And we're going to stop there. That's the end of this section. Homework. Hold on. I don't have my pancake. Open already. Oh, you can't open because you're not. Can you even open? I'm assigning 12 to 31 odds, which is really, I guess, 13 to 31 odds. But if you do the evens, those will be extra credit. And I'll do that about half of the assignments. Okay. So you have a lot of opportunity for extra credit on the homework. Okay. Any questions on anything at all before we go? All right, I will see you tomorrow. And I'll have all this stuff posted. The stuff from yesterday is already posted. The stuff from today will be posted sometime tonight.